Hi, it's David here with Futures Trading. I want to give you the rest of the information. I told you guys I was going to catch the 9:30 in the news. I'm going to try to just catch the news and let that be all of it. So we got some news at 2 o'clock. It works all the time. So you can do it yourself. Essentially, that's all you have to do. Just take the time, go ahead and comb through what it is that I'm going to tell you on your own charts, and definitely it'll happen. News. I'm going to show you the 9:30. I'm going to actually show you what had transpired then. But I want to try to capture the 2 o'clock. I'm going to try to do my best to stay on here for at least an hour. So this will be a bit longer. If you have the time, view it all. If not, fast forward. That's all you have to do. If the audio is still somewhat distorted, do forgive me. I don't know why it's happening, and I'll just grab me another headset at some point. This is just free information, so I'm not running out, to grab a headset just for this. I just want to make sure that you guys can at least hear me. All right, so I know that you can because some of you watched this video and you were kind enough to leave a few likes on it. Thank you so much for those that had left the like, and even those that shared your personal thoughts publicly and allowed me to know that you're finding the information useful. I'm sure that'll help someone. So thank you for those that did that. Really supportive. That's the kind of interaction I'm looking for whenever I make a video. Someone that's willing to align themselves with the goal, and that's to help someone else get it from their screen to someone who needs it, and that's the goal of the channel. So thank you for those of you that stepped up. I know it was at least 3 of you that stepped up and expressed your level of appreciation for the content. Thank you so much for doing that. We want to get some people some help. That's the whole goal. Now, I gave you the price action method. I gave you the trend. All right. So I gave you the chart scale too. So I gave you a universal approach, and universal just means it's applicable to all cases. So you can find it everywhere. All right. That's really important that you know that. It's been doing the same thing over and over again. And I want to make sure that you know that. You need to know that if you're trying to trade and you want to win, if you win, it's this, I can assure you. So the market will turn roughly in the same place on the chart. You don't have to look really far to the left to get this to work. I can assure you that's not really how it works. Real time is important. That's why we're going to look at it. But the chart scale, yes, it can tell you where it's going to happen, because within the frame, you got to think within the scale of the chart, if they plan to reverse, it's going to happen right in front of you. So try not to leave that piece out. The universal price action method, I showed you that. We'll talk about that a little bit too in conjunction with what it is I'm going to show you. I gave you the universal trend, so it's going to always happen. I'll show you that as well. The universal threshold and entry. This is like one of the, I ain't gonna say it's a final piece, but it's definitely one that you can just take off running with. I would say that it gets you a lot closer than the trend as well as that price action method. It'll get you closer. So this should help you. And again, it's better than a daily bias. I want to make sure that you understand that. We're going to take a look at why I say that. All right. So new to the channel, thank you so much for stopping by. The goal is to create a library online with information that's practical. That's all. Practical stuff that you don't have to stretch, your understanding to try to comprehend. You don't have to do a lot of checklist stuff. I need this, I need that to align. Then, you don't have to do none of that. So I'm trying to give you some professional tactics on how to interact with the market, given what the market is actually telling you. Before you right now is a chart. I'm going to try to catch this FOMC at 2 o'clock. So do be patient. I'm going to try to deliver this information in a timely manner. Before you, I have a chart in front of you. There's a lot of red and green bars. I do want you to take a look at that. There are some bars that don't have any color. If you notice, they're happening in basis or at turns. All right. And we're going to talk about why the range, the universal threshold, is important. It's happening in basis and definitely around turns. And this is why I'm showing you this information. You've never seen no one do this online, and I want to make sure that you can see it here. It's happening in places. That's really important. All right. So when I tell you that this threshold is important, it's better than your daily bias, we're going to take a look at that. Although, again, you can utilize whatever approach you want. Just kind of blend this with it. It'll help. That's all. And so I'm going to just scroll through this just a bit. Every bar that's colored, it actually closed outside of that threshold, that range, if you will. It closed outside of that. All right. Now, any bar that didn't do that, it's not to say you can't know which way that can go too. I'm just trying to give you an idea of likelihood. So if you see a green bar, chances is you saw another green bar. It's not likely that you're going to see a bunch of red and green bars side by side. Now, if that happens, you're going to see some bars that don't have any color in it, no kind of opacity inside the bar. But for the most part, wherever you see a red bar, you're going to see another one after it. Wherever you see a green bar, you're going to see another one after it. That should kind of draw your attention to go with the close. Now, let's get into that. All right, so that's this morning's activity. We're going to kind of pick this apart, and then we're going to look at the real time. Let me blow this daily up. I got to put our zones back in there. All right, so let's put our zones back in here. Oh, it was right here. I believe I said it was right here yesterday. I put that there in that last video I shot on yesterday. Yeah, I want to get this the best I can. Hold on, I gotta move it down just a hair. And you notice on yesterday's activity, they managed to come down and close just above. It's not picture perfect, but you get it. They closed right above that threshold on that bar. Now we do have another one back here too. That's where this red bar, this big green bar, shot down. Okay, so that's kind of like right here. I'm gonna just throw this here real quick so we can kind of get a look at that as well. All right, so right in there. So we got that threshold there. I still got that level up there from this bar's threshold. That was the upper part of it, and they were turning the corner, coming back through the top part of that bar. And I showed you guys on yesterday's video what that looked like. Let me see if I can compress this and show it to you again. So yesterday's video, see, they were up there, they hit that upper part of that threshold and just sold off. They just dropped. Okay, they just drop. And so what we're going to do is we're going to take a look at why I say that daily bias and all of that stuff. You can go with that if you want, but I'm going to try to tell you this so you can kind of, I don't know, just have an idea of what they'll do today. So you'll know this is what they'll do today. So chances is they'll probably do this tomorrow too, and you can kind of get started on that aspect of doing it. If they wasn't going to go back out the close here and back through the top yesterday, okay, there's that range, the threshold of the range high here. You want to see them fall under that. And definitely once they get below the lower threshold there, yeah, well, they just kind of picked up speed and took off. So you could have been definitely shorting somewhere up there and possibly got it to work. All right. Now, let's see here. All right. So there's the threshold on this one. I'm going to put it there. I don't think the news would shoot it up here, but let's just put that there for viewing purposes. We're going to make sure that's there just in case they decide to shoot it up there. I don't think that's it, but let's just see. Well, they spent a lot of their time doing a lot of back and forth. Okay, so we're going to go. Now, keep in mind, this is fluid. I have this down here to kind of reference. This is today's. Okay, this is today's threshold. All right, so that's threshold for the day. That's yesterday's. All right, now this is today's threshold. So these are our prices. It's fluid, so it can move. But for the most part, when we go to take a look at the activity, we're going to just kind of take a visual look as to how that swinging all this morning has been. We're going to take a look at that. But let's do this before doing that. If you're new to the channel, we're looking for 7 bars, all closing lower than the prior. So this was our 6th bar. We had a bunch of back and forth in there, and then they gave us the 7th. Once they give you the 7th bar, there's your expected distance here. Let's just throw, matter of fact, let's do this. Let's just do this. Let's do this. We're expecting them to fall. Well, now let's get this one. We're expecting them to fall at least to here. So at least to there to get that target. All right, now, we're going to pick apart this. I'm going to go ahead and skip 9:30. I'm going to just go ahead and let you guys kind of sort that out. Again, I'm only here to try to get the channel some information to gel with what it is that I've already disclosed online. So I'm not going to spend too much more time up here. I told you my farewell was just that. I don't want to be up here if there's no support. I can't be up here. I don't want to waste my time, nor yours. It's important that we don't do that. They turn the corner. 9:30 is on this bar right here. So this is the 9:30 bar. They kind of pushed down and then they came up really aggressively. Well, as you can tell, they went right into the high, and I just made the turns here. That's where they actually turned it. I tried to make that color green or either red. Now everything in between is like a red outline, green outline, but it's grayed out, so you can see it. We're gonna come through that. They went up there. They rejected this area before 9:30. Remember, the 9:30 bar is here. So the 9:30 bar is on this bar right here. I'm just kind of put this right there. That's the 9:30 bar right there. All right. And then they popped up. They drove down. We can do this too. I'll do this just for the fun of it. I don't like to do the left side, for examples like this, but let's just do it. Let's just do it because I want to make sure that you can see your 9:30, fairly quickly. So you got a bar here. They've been trading above this threshold, if you will. So just kind of mark that. Let's just see where that goes. Kind of like what's happening with this one. Let's just mark that and see where that goes. All right. So if you want to go at it from the left, if you want to do that, you're more than welcome to do that. All right. So now they did end up closing beneath that threshold, but they managed to drive back up after making the 6th bar. All right. So when they drove back up, and we're going to dive into all of this, and then we're going to talk about that. But right here, they went up there, they tested it, they turned, there's 9:30, pushed up there, but then they rotated. Now, this is something I want to make sure I express to you before we move forward. I told you in yesterday's video, you got to go what's reasonable. All right. So if they're going to go down, go for at least that. Okay. With this bar, if they're going to go down, They played in that threshold. Now we're going to start picking apart this in here. They played inside that threshold just a bit, several bars. Kept trying to push down. They didn't want to do it. Then they pulled up to the back of the bar. The back of the bar is up here. Yes, they closed outside this threshold. You got this one to deal with too. They closed outside of that one as well. That's fine. Go past this stuff up here. They didn't do it. They turned around and they gave you one right here. But before doing so, they had pushed down into this turn. Now, this is the threshold, the green box right here. They pushed down into it and they came out of it. All right. And they pushed up. So if you're trying to catch that turn, I'm trying to help you see what that would look like. All right. So now they pushed up, all these wicks diving in that box. All right. But on the way, just in here, let's just go in here. Here's the threshold to this bar. They never closed beneath the bottom, the lower part of that threshold for what? Four, let me see, 1, 2, 3, 4, 5, 6, 7, 8 bars, and then they finally closed beneath that one, but didn't close beneath this one. From above, again, they were trading in here, turn the corner, then they gave you another one. All right, so now you got 1, 2, 3, 4, 5. You got 5, maybe 6. They came close to that one on that one. 7. All right, so then they turned around and then they closed beneath that threshold, and guess what? They took out the bottom and hit your distance. So you actually made the distance of this bar, which is reasonable. All right, now I told you yesterday, 30 ticks, you really don't want them back above that close, but do keep in mind volatility, bar sizes change. I'm giving you little tidbits. You're going to have to build what it is that you will want to happen for your trading around the things that I'm expressing. So I'm not telling you something to just apply to every market condition. That's not what I'm telling you. I'm giving you framework. So in a general rule of thumb is 30 ticks because oftentimes the bars aren't that big. When the 930 come, threshold is far more significant than me giving you the tick parameter. So if I'm telling you 30 ticks, the threshold overrides that. So they can absolutely still come into the bar. General rule of thumb, given the size of the bars most of the time, you don't want them coming back that close. 30 ticks. You don't want them back beneath that close or above that close. 30 ticks. You just don't want that. All right. So they made what was reasonable without breaking that bar. They didn't. They turned around and then they finally gave you your 7th bar. They kind of pushed up again. They can turn the corner. Don't be surprised. And again, they actually pushed into this, pushed up first, and then they came down and blew it. So this range right here, they actually honored it for a moment until they pushed up there. Realized that this bar right here had something going on because they had tested it, several times. 1, 2, 3, 4. That's 4, and this is 5, 6, 7, 8. So they tested this threshold several times. This is a no close bar. I have that. I just got the levels in here, not the text. Because we're doing, of course, the threshold. I didn't want to have too much information like yesterday's video. So this is a no close bar. That's the hard stop. They didn't trigger it and they turned around and they failed. So that's that information there. Now let's talk about all of this. And I wanted to go ahead and capture this because a lot of the trading that's going on, it deals with a lot of this, the overlap. And so if you want to be able to trade overlap, I want to give you an idea of what that looks like. But while doing so, let's take a look down here at today's and range high and range low. Let's just take a look at the threshold. Let's take a look at that. So we're going to go with give or take. So let's I know it probably moved down a hair, but let's go 480. Let's say that's 480. Let's go 480. We're gonna go 480. Let's do this. 480. Let's go 480. It may have moved down just a hair, but we'll still go with it. 480 and 480.50. It's saying. And then we're going to go with, all right, now let's go with the other one. That's 448. 448. Let's go with 448 here. 448. I'm going to do all of this in front of you so you can see it for yourself. So 448. All right, so we're going to do that. All right, so this is a threshold that moves. It just moves a bit. That's all it does. It moves a bit. So 448 and all of that. So yeah, so they kind of rotated back up. And again, this may have been a little bit higher. This may be been a little bit higher. They went back up there to test it. Now this is today's activity. All right, now you want to keep them. You don't want them closing up here. You just don't. So while you're trading, if you want to know your bias. Now, you can just visually go with the mid and say, hey, somewhere outside of the mid, and you can do your own math. It's not Fibonacci. I'm telling you, I don't do that. That's not it. It's not Fibonacci. It's not, okay? You can go with whatever math you want to go with, but I'm here to tell you With a 1 minute chart may not be so significant, but the daily, if you're trying to get a bias, yeah, you might need to be a little bit more specific of the criteria as to where they need to close. Really important. All right. So they come back beneath, let's say, the 480. Let's just say 480.50. They came back beneath 480.50, turned down, kind of got right in between the two, kind of rotated a little bit, and now this is where we're at now. Now, keep in mind, this is fluid, so it may change while we're on here. All right. But I'm trying to give you an idea of bias. And we're not just doing the mid. We're not just doing the mid. Is far more simpler than that, if you ask me. It is. You got to know, and I told you guys when I first started the channel, I can tell you pretty much where price need to close. It's important that they close, because remember the chart I just showed you with all the red and green bars and some that didn't have any color? There was far too many of them that had color than those that didn't. So we should anticipate in some degree that price will close outside of one of these levels, possibly. So let's go ahead and try to get an idea of what the day actually going to be. And in most cases, just in most cases, you can use the day before to get an idea of what's going to happen. That's all. You can use the day before, because that's what we're doing. We're letting the bar finish, and we're just giving just an occasion to the fact that if there's a chance, this threshold on this bar will create some kind of effect on this bar here. So you can get the information a day in advance. We don't have to wake up to tomorrow and say what tomorrow is going to be. That's not how it really works, and in my opinion. Now, you can still use today's activity, because that's what we're about to do. We're about to use today's activity, but you can, I told you in yesterday's video, somewhere up at the, I think it was up here somewhere, 880, 783, somewhere up there. It was somewhere up here. I said, yeah, they shouldn't come back up here and close, and they just kept going down, going down, going down. You could have started yesterday on today. They're lower. As long as they get back beneath this close, they were going to go down. And so it's really important that you understand, you don't have to just wonder when you wake up. You don't have to wonder. The market is doing the same thing. That's all I want to express to you. So they're grinding their way down. Let's begin to read this in real time. All right, let's begin to read this in real time. And we're going to do this for it's 1:15. Let's say 1:15. So we're gonna try to do this 45 minutes. Then when 2 o'clock come, we're gonna see how the market responds at 2 o'clock. All right. So threshold is important. Yeah, they went above the bar, but did they or did they not come back and close beneath this threshold? All right. Yes, they did. All right. So now, yeah, they triggered the stop. You don't really want them behind the bar, but again, just understand 2 bars. Don't give these guys more than 2 bars. Please don't do that. You're doing yourself a criminal act if you do that. You don't want to do that. So here, they're reaching into this bar here. Okay, they're reaching into this bar. Let's see what the response will be. You can watch my 1 second chart down here. This color that's in this chart, okay, I want to tell you this. It's not the same color that was up here yesterday. It's not the no touch, no close color. It's not. It's doing something totally different. And of course, the levels as well. And again, if you're new, you don't know what I have here. All these indicators you're seeing is just stuff I coded, and they all calculating something so different. Each arrow, each pressure is doing something totally different, just like the color and the levels in here are doing something totally different. You'll find color in some places. You got color here, but no level. They're doing something different. All right, so they're doing something different. I'm trying to account for just some aggressive trading, if you will, some various different conditions. And none of this stuff has anything to do with any kind of oscillator, support and resistance tool, none of the sort. Okay, so I want to tell you that. So you can watch this. You can watch this if you see them being able to absorb the color, the green in the instance of going down, or the red if they want to go up. If you can see them absorb that color, that's good. Then they should keep going. So either it's supposed to work and send them that way, or it's not going to work and they're going to absorb it, and then we're going to turn the corner. Just like here. Here's the green. They lean back. They give you another push. All right. So when they come down into that green, they lift it again. However, we got red above us now. All right. And they're fighting. You can see the fight. They came down here, kissed the back, lifted up, fought a little bit, broke it. Now, guess what? Don't come back past here. They tried to give you the buy, but then they got aggressive and they went down. Okay, now here, they turned the corner. They made the green. They went past it. Now they're getting aggressive with the buying. So you can take a look at this information down here should you want to. It's totally up to you. You don't need it. I'm trying to tell you something that you can utilize no matter what platform you're on. The main thing that we want to do is pay attention to the threshold. So now we got another threshold on this side of the market. All right, so this side of the market, let's see what they do when they come into it. This is a no close bar here, but they closed above it, but there's your hard stop. If you're trading the short using the no touch scenario, if you're unfamiliar with what the no touch is, I'm going to touch on it right now. So here we go. We get a bar. We get another one. The next bar mid, which is that little blue line that's floating, is below that low. I don't have the mid in every bar. I don't, because I want to talk about this threshold. But the mid is falling below that low. Well, guess what? Now you got a hard stop. This become the no close bar. You only have two shots at it. And I want to tell you that the threshold that's on this bar and then the threshold that's on this bar to go back down. All right. Now, most of the time I told you this is no close bar because oftentimes they'll reach past that, won't pass that threshold, turn around, take off again, just like they're doing here. So this threshold here is all about mitigating risk. You don't want to put a lot of risk on trades. That's not how you're supposed to do things. All right, so then they took out this. You can see the aggression in the activity here. This is a 1 second chart. This is a 15-second chart for those that don't know and didn't catch yesterday's video. There's the aggressive selling. You could have rewind the video if you didn't see it. When they got up here, you can see things changing. And then, of course, the red kicks in and then they pushed harder. All right, so this is kind of one and the same. So let's just kind of drag this over and see if they'll come back up here if they decide to, or let's see. Now, keep in mind, this is fluid, but I'm going to draw this here. All right, it's like the daily, it's fluid. So it can move before the bar closes. Let's see what the response will be when they come back in here. They're coming into it now. They're trying to close into it. They're trying to. I don't suspect that they will, but let's see. They can close outside it. I doubt they'll close in it. Let's see. Close outside of it on either side. It doesn't matter, but oftentimes this is what creates the red and green. The colored chart that I showed you, the red and green, close outside of it. Okay, now it can be in either direction. I don't care. I just know it was going to close outside of it. So it can kind of tell you while it was coming off its low, looking like it was going to be your hammer or whatever. It can literally tell you in some degree either that's going to be true or we're going to fill that range of that bar, and that can be important. Just those few ticks for timing can be important. That's all. And so they reached into this threshold here. You can see they trapping that aggressive buying. Let's see what they got on this low here. You can see them trying to come in here. It had a little bit of selling, tried to get it down. Let's see if they can push past it and come back up here just a bit. Let's see. If not, they're capable of falling further. There's only one more rule I want to give you. There's just only one more rule I want to give you. Before it was let the mid fall beneath the low if you're going down. And of course, it's the opposite if you want to go up. Let me draw that scenario for you. If you're new, I got time because we're going to try to be up here for a little while. So let me draw this scenario for you. Keep an eye on what's happening, people. Please keep an eye on what's happening with the candles while I draw this. It's the same stuff. It's monotonous to actually do this. I'm going to tell you right now. It's the same stuff. Every day I wake up, I do the same thing, and you should too. And just take your time. You'll get there. That's the whole purpose of me delivering this information to the public. I'm trying to get you some information that you can buy yourself some time until you get an understanding of how the market actually works. I just want you to be able to buy yourself some time. That's all. Don't want you to lose your account and, of course, sour, your interactions with others. Because when you lose, it don't put you in a good mood. Most people have a hard time with going forward emotionally when they're not getting the results that they need. And I want to make sure that the people around you do have a pleasurable experience being around you, even though you're trying to do something that's a bit challenging. All right. So want to help you a bit. So hit the like button. All right. Now, here we go. They're coming back into this. You can see, of course, they're trapping the aggressive selling. They're trying to trap it. So let's see how high will they climb. Let's take a look at that. Let's put something up here. Let's see if they want to get past here. Let's just see. So give or take somewhere in there. If they pass this, that'll be interesting. Let's see if they'll just pull up to this and turn back around. Let's just see if they get up any higher. Let's see if they want to do that. I know we got quite a bit going on over here, but let's just see. They're leaning back down into this aggressive buying. They may get another lift to the upside. All right, so now let's see here. Again, no book map and all that stuff. And again, you can buy that stuff if you want. It's totally up to you. You can do that. I'm trying to show you where you should be anticipating some kind of reaction. So you can get your value on your platform or whatever tools you want to use. Totally up to you. And you can just go from there and see how it all works out for you. That's all. So, yeah, they're coming in pretty hot. So let's see what we got. Let's see how they make this all work. They're hitting the back of that bar. And then let me kind of do that. They're hitting the back of that threshold on this bar that created that big push out of it. They're hitting the back of that. They're hitting the back of that. So let me just kind of open this up. I'm going to open this up just a bit so you can see that big candle. All right. So They're hitting the back of that. That's all it is. They're hitting the back of it. They traded outside of it. Now they're coming back up. That threshold is important. It is. And as so this one is too. That's on this bar. I doubt if they'll get to the one behind them. I doubt if they'll get up here, but maybe they would. Maybe they would. Maybe the news can do it. We're gonna see. So I'm gonna just make this bar really big. As long as they're beneath here, just know there's a chance they can rotate back down there. Just kind of keep that in mind. That's kind of been the thing here. This threshold that we just put up here. This is today's activity. Now this will change, and should it change, and I don't move it, just keep in mind this is important down here. All right. So, and this is price where it's at currently. Let's see. Okay. Yeah. There it is. All right, so now let's see. They're kind of accelerating. You can see, oh yeah, how they treated this. They got right into it, got aggressive, and then pushed up even higher. All right, so that's fine. That's fine. I told you it could be something else if they get past it. It end up being something else. And I did say that. So I'll just throw. I don't know if they'll get all the way back. Oh, I'm on the wrong chart. I'm on the wrong chart. So let's do this. All right, let's just kind of sit this here. And now I'll put one right here. You don't want to see these guys get past 2 bars, but I'll throw that right there just for the sake of saying. Now let's get back to what's happening up here. Let's get back to it. They're not really reaching back. I was kind of hoping they would give me some more of this. This is the whole reason why I got on here, because I wanted to capture some of that back and forth. Now you can take a look at this on the way down. You can just evaluate how they retraced and then took off, retraced into the range, took off, retraced into the range, took off. This one, they closed above the range. They did, but they still sitting right in this one right here. So this green bar, that red bar took back off. Green bar here didn't close above the range, took back off. There's a green bar here, went into the range, and bam, took back off. So I'm trying to give you something that you don't have to squint to see. I don't want you to have to struggle to see what it is that's on the chart. It's really simple. All right. Now let's talk about that rule. Let's talk about that rule that I want to give you, because this is a universal threshold. Universal. And no, again, it's not Fibonacci. It's not that. All right. So, but again, the mid is in the middle. So from there, just work around what it is that you're seeing and see, can you figure out what it is? I can't give you the specs. I can't, but it's really simple. It's really simple. It's nothing hard. They reached in there. That's the wick zone. Once it gets back outside the close, I know the timer is almost about to tick out. You want them to stay outside of that and don't want them coming back in this bar. 30 ticks in my opinion. But hey, the threshold is more important. That's the key. All right, now let's see, can they give you what's reasonable if they decide to head out back outside that close without going through the back of the bar? That's what's reasonable right there. They're beneath the close. The momentum is not on your side. You can see it inside the 1 second. They're aggressively trying to sell it back down. All right, so there's the 1 second. You see the 15-second firing off. Let's see what they got. Now they're still hitting this threshold. It's a chance. It's just a chance. This is a no close bar. That's the hard stop. They can come under here. And again, you only have 2 shots at it. You have this one and you have this one. If you don't give them more than 2 bars, you see how aggressive they're getting. So that's why I told you the momentum is not on your side if they're beneath that close. They kind of traded above it, but it was right at almost the close of the bar. That's kind of tricky. They traded above it, but they can't hurry up and came back in. They do not supposed to be drawing down on you. They just don't. That's bad. Now, if you want to do a risk trade, what you would do is take the trade inside of this threshold, hard stop behind that bar, and just say, don't hit me. That's the risk side of it. If you're trying to catch momentum, you wait until they get back above the close. So if we're trying to go up, we're going to point to that rule right now. This is not a trend up, so they can turn back around. Where are they at? Okay, where are they at? They're at that 448. All right, but if they're trying to go back up, we're going to go with this rule right here. The live bar that's trading needs to be above that close. All right, so I prefer it to be 2 green bars, but this could work too. If they get back above the close of this red bar, it can go up. The only problem with that is you have your threshold above you, and that's why I say I kind of like it when it's 2 green bars versus red or green. I really don't like those scenarios, but you have to have that if it's going to turn around. That's all. So you had red, green, green, red. So it has to do that in order to turn around. But the preferable way of going about being able to get in and out of a trade, let it be green and green, and just it's like pairs, it's like playing cards, little kitty cards. Make sure they both look the same and go that way, and you don't want them coming back this way more than 30 ticks below that close. Now, again, that is just a rule of thumb. It can change based on volatility. You find out which one works best for you and go with that. Now, this is just inside that. You can see that turned into a wick. They're pushing up into here, but they're coming back. All of that aggressive selling right here. It's aggressive selling. They're hitting the wall. They got close. They got close. They got close. Let's see if they actually pick it up this time and take a run back to the upside. Let's see if they'll do it. Let's see. They're hitting the zone now. They're hitting the zone. Got close. I don't like that they're trapping. They're creating that trap there. I don't like it. It's not to say that it can't work. It still could work. Let's see if they can do the job. Yes, they ran the stop on the bar. They did, but they're not closing beneath this threshold at all. So, and of course, this one is still in play. All right, now let's see. Let's do this. Let's kind of jail them together now at this point. All in real time. All in real time. This is your wick zone. Do they have to make it into it? No. I prefer that they don't. But the main thing that's going wrong with traders, and this is just something I know because I'm a trader myself, is that you could end up anticipating something to happen and it won't, and you need to know kind of what it looks like, because cycles, that's all this market is doing, is cyclical. So it's constantly going through cycles. And so how far is too far? I'm trying to give you an idea of what that looks like. How far is too far? You don't want these guys going too far against you. That's not it. Don't do that. All right, trying to help you out here. So let's see. This is kind of fluid. Again, it can change. I'm just kind of drop this here. It can change. Let's see if they respond to this, because I know they kind of fell out of this threshold here. That buying is coming in, so I think they can get it done. All right, so I think they can get it done. Let's see if they'll give you a wick. We're going with this rule. There you go. The live bar above the close. It's easier that way. That's all. It's easier that way. You can hurry up and get your target hit, given that the live bar is trading above the close. That's all. You want that going on. Let the live bar be a trading above the close, and then go for something reasonable. What is reasonable? I'm going to say it one more time for you. This. Just go for this. Don't make this more complicated than what it has to be. I don't like the fact they're coming back this way and we still have 30 seconds on the chart. I don't like that. All right, I don't like it. But let's see if they can still hold this threshold without going under the bar. This is a no close bar. Should they want to do it, you only have one more shot, and that's this. All right, but let's see if they can get back to it. Let's see. We don't want them coming back this way more than 30 ticks. We just preferably don't want to. The bar is pretty reasonable at this point. The bars are 30 ticks wide, roughly, so clearly they shouldn't be doing too much back in this direction. All we're doing is going for something reasonable. This is reasonable. This one didn't work. All right, that didn't work. All right, so couldn't get that to work. Did they make this one here? Did they make this one? Let's see. Did they make this one here? They may still be working on this one here. Yeah, they still working on this one. All right, so pretty much one and the same. They got close here. They got close, but they would have rotated down, scared you a little bit, and now they're back up there trying to get to it. We're still waiting. We're still waiting. Let's see if we can get it done. They're beneath the close. Momentum is not on your side when that is happening. You can look in the 1 second and you can look at the 15 second to see the same thing. This is monotonous. So for the next, 30 minutes, you're going to hear me kind of say the same things, but it's worth watching, because real time, this is something that I want you to know. It stops us all out. Looking left is not going to never stop me out. It has never stopped me out. Looking left has never done that. So spending weekends all weekend long, drawing up a chart to the left, that's not the problem. I can tell you right now, you're wasting your weekend. Go ahead and do something fun. Don't do that. What's stopping you out is your real time. You have to make sense of what's happening in real time. And inevitably, what's happening in real time will show up on the left side of your chart. It will. If the market is going to turn, guess what? It's going to turn right inside this frame. It's just that simple. Let's do what's happening over here on this hard right edge and get an idea of what rotation look like. So this is your rotation zone. They're coming into it. Can they get back above the close? I told you, being beneath the close, they can move down. Here's your rotation zone. Can we get back up there? This is a no close bar right here. There's the hard stop bar, because this bar's mid is above that high. So they can come under here, and I told you only got 2 shots at it. This is shot 1 for this setup. Okay, now for this setup, you have 2. You have this bar here, which is a no close bar, and then of course you have this bar's threshold here. We're right at that 48. We're right at the 48, and they do not have an uptrend. They don't. I don't like this doji show. They should be able to get through it. Let's see. 1, 2, 3, 4. We can count them. Let's count them. Let's just do that. 1, 2, 3, 4. And yeah, we still at 4. All right, so we got 4. We don't have 7. All right, so we just got 4. Let's see if they can give us some more. 4, give us some more. All right, so now let's look at the 1 second here. Let's see if they can pull down into something that makes sense. Let's see. Let's see. I see they're trying to get aggressive again. I see they're trying to do it, but let's see if they can pick it up. Yep, there we go. Come on, pick it up. Pick it up and run it up the board, please, and go ahead and get that target to the upside. Let's go ahead and see, can we go ahead and at least meet this? I know they're almost here at this one. They're almost there, but let's see, can we get this one to work? All right, so yes, go, 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 go. There we go. All right, so now this is your threshold. Let's see, can they just tag it and go? Get them outside the close, preferably green with green. Now, if you got to do the red, you just have to do the red. All right, and there's nothing wrong with that. Just make sure they're coming back that way. That's the most important part. Make sure they're coming back that way. Now, if you want to do a risk trade, I told you, you can let them pull into this zone. You can let them pull into that zone. Hard stop behind this bar. Don't go widening your stop. Don't do that. If you see that they'll hit you, just cut it and get back in on the next zone. Because what you don't want it to do is get to this zone and do the same thing it did to this one and fall through the bars. So my suggestion to you just cut it, take a small loss, pull it back down here, and just kind of break that risk up. Don't keep just offering up your stop, because they can get here and do the same. They can just go right through it and decide that they want to fall and just keep going down, because we don't have a trend on the board yet. Now we're going to count our next bars. All right, so now we got 4, 5, that's 6. Can they give us one more? Now we're going to try to get us an expected trend here. They've done this before, and then they came crashing right back down. Let's see, the close of the next one probably be nothing too crazy. Let's go with something about like this. They're in the wrong direction. Momentum is not on your side. Let's see, can they get it back above that close? Momentum is not on your side. Get back above the close. Center of the trend. I know they're kind of like above it, but I want to let you know, if they were going to go up, your center was back here. All right, so the center of your trend, if they were going to go up, that was back here. All right, so let me put that in play. Can they finish above that close? And then we'll have our trend in place. I'm giving you absolute context, everything that you will want to have involved with your trade. People, I know they're online chasing this concept right here, chasing this one right here. This high is beneath that bar's low. This low, that high beneath, one another. Let me make this another color. All right. So everyone is chasing this one right here online. This is what you're chasing. Some gap between bars. Okay. And I'm not saying that don't work. I'm not telling you it don't work. I think what you need to understand is, in order for this to happen, I'm trying to tell you what's going to show up before that actually shows up. Is this. This is what's going to show up before that happened. I've been training for many years. There wasn't no ICT, nowhere around a threshold. Same thing. I know what's happening with one bar. I don't need 3 of them. If you can't make sense of one bar, 3 is not going to help you. That's just more risk. All right, that's all it is. And there's there we go. That's where I figured you'll close at. Now let's do this. Let's project this forward and see how high they may want to go. Let's see that. But the no touch, no close pattern will show up before your popular fair value gap. I do not teach that young man stuff. And so you can definitely go ahead and utilize his information. Again, it's not to say it won't work. It should, given that you know how to trade it. And there's just too many specifications from what I'm gathering, looking online. I'm seeing there's a lot of specifications, and it's not that complicated. It's really not. It's simpler than that. And I'm doing my best to show you that. I'm doing my absolute best to show you it's a lot simpler than what you think it is. And there's so many different ways you can view this information. That's all it is. It's like reading a book. It's information, and there's various different ways to enter traits. Various different ways. It's doing the same thing, and it's been doing it long before he or I began to disclose this stuff to you. We became aware of just things that the market would do. That's all. And I venture to say what I'm showing you is just simpler. That's all. It's simpler, and you can utilize this information if you want to. I have nothing against any educator out there. I don't care if you're teaching the RSI, MACD, or whatever. You can go with that if you want. I just want to give you something that the market is actually doing. That's all. That's all. This is what it's doing. This is what it's doing. It's doing the same exact thing over and over and over again. All right, so there's that threshold there. They're not touching this one. They're kind of just above the close, doing that above the close thing. I was hoping they'll offer us some of this activity for the duration of me being up here, so I can give you some of that chop activity, because that's the thing that's probably getting most people in trouble. Live bar is above the close. That's what you want. You're looking for that all the time for longs, preferably a bull and bull scenario. All right, because remember I showed you the chart with the color in the bars. You very rarely did you see a red bar, green bar, red bar, green bar, red bar, green bar. You saw two greens, two reds, and that's pretty much what's reasonable. So that's reasonable to go for the target of the bar before it, because the bar before is a trend. All you got to do is look in this 1 second chart and you can see it's a trend. It's a trend. So when they pull back, it should go the distance of what the last push that it made. It should. It's really simple. Don't make it complicated. Don't make it complicated. You go and start giving them more than one bar, or I would say two, more than two bars. Because remember, they can take away one bar, which is just, you can take away this, just don't take away what started it. Okay. If this started it, okay, because they stopped. Okay, I'm not talking about this. Don't worry about that. They went down and buyers came in and pushed it up. Okay, well, you pushed up and you stopped again. So this is them stopping again. You can come back under here. You don't want them to, but you can come under here. Just don't come back and take this out. Right? Just do that, because you got to assess how far they're coming from. See, that's another thing. By the time they get there, they could be working on a whole nother kind of experience. And that's the thing that you will want to kind of keep an eye out for. All right, so we're beneath the close. The momentum is not on your side. I'm gonna keep saying the same thing, so you can fast forward the video here. You don't have to keep watching me say that. But I'm trying to capture the 2 o'clock while explaining this to you, and I'm really hoping that they give us something different. I want to see some chop. I want to see some of that, and that's why I'm trying to make the video a little bit longer. Yesterday's video was 28 minutes. You can learn how to take entries in 28 minutes, and to be quite honest, I can show you this stuff in less than that. It's really simple. Now, let's see. They're moving up here to our 80. They're moving back up to our 80. What's the bias? Right now, it's still undecided, in my opinion. It's still undecided. Get outside this threshold here, and then sure, there's a chance by the time the market shuts down, well, 5 o'clock or whatever, there's a chance that they can be back beneath here. And so that's down at the 480 or 48. So that's down here. They can be back beneath here by 5 o'clock. They can. And so it's still undecided about the up, I would say. Now, you have to course trade the time frame that you're currently evaluating. So this is the 1 minute. This is what they're doing currently. So go with that. That's all. Just go with that. This is what they're suggesting. Go with it. Don't fight it. Go with it. We saw it turn from the bottom. I want you to go with these guys when they're going that way. Don't fight these guys. Make sure you go with them. Do whatever they're suggesting for the moment. Don't need a lot of charts. I'm trying to explain it to you with just this chart, but I do have some stuff down here so you can just see the sensitivity in price when it pulls into these thresholds. That's all. When you see them hit the threshold, I want you to see the sensitivity of it. That's all. So you'll know, hey, he said, when it pulls into this area, try not to do this because it could be doing that. You don't have to have my tools to know that. You can just absolutely know when they get anywhere remotely close to that mid, let's say the mid of the bar, it's a chance that there's some aggression that's going to show up. That's all. And it's, again, you don't need a bunch of fancy tools. You don't have to have it. It's really simple. All right. So let's see what they do right here. Yes. Okay. All right. So let's do it some more. Let's break the low of that bar. You're still beneath the close. Let's break the low of this bar. All right. So now what's reasonable? Go for the distance of this bar and this bar alone. And there it is. All right. So you don't have to sit there and try to capture a whole bunch of ticks. Just go for what's reasonable. Capture one bar. Just do that and be done with it. Capture one bar. If you have to piece it together, let's say you have to piece your trades together, do that. Hey, take 10 ticks off this trade. Next time they give you the setup, take another 10. Piece it together. Just piece it together. You don't have to stay in trades for a long time. That's not required. Oftentimes when people do that, if they're offering you conditions that's not favorable, where they're willing to, of course, keep making higher highs, lower lows, however that goes. If they're not willing to do that, you'll find that they would have put you net positive, came back and took your money. And I want to let you know the rotation can cause that to happen. But if you were net positive, I'm pretty certain they offered you what was reasonable. And you just expected more than what it is that the market at the time wanted to offer. So you have to make sure that you're including and not excluding the market. The participants is what's controlling this experience. Attach yourself to their idea of what it is that they want for themselves. You can want whatever you want. You're not controlling the experience. Make sure that you're attaching yourself to their model. Make sure you do that, because if you're not, your expectations can absolutely be interfered with. I'll just say it like that. They can stop that from coming true. All right, so let's see if they can get through. They're beneath the close, so they can keep going and offer you what's reasonable. All right, so let's do what's reasonable again. All right, so from the close, that'll put them right at the center of this trend. All right, so that's what's reasonable. Right beneath that close, you're going for what's reasonable. Let's see, can they get it done? You can watch this if you want. Again, you didn't want them, again, yeah, I get it. I absolutely get it. I understand. You don't want them, kicking the stop. That's bad. But I suspect at this point, that may be the case. That may be the case. That just may be the case. This bar has a threshold as well. Let me outline this for you. They have a threshold here. Notice what they're doing. They're headed right back to that 48. So they kind of, let's see, can they close outside of it? All right. And still give us what's reasonable. Now you got what was reasonable here. Let's see, can they give us this too without the breaking of the back of that bar? They didn't break it yet. They're headed back this way. So let's see, can the next bar just, yeah, we got aggressive selling coming in. So yeah, it should be able to get it. There we go. So, all right. So aggressive selling coming in. They're headed back this way. Let's see, can we get here? Let's see, can we get here without them coming back up there? They didn't break the back of that bar. There they go. There they go. They're coming back in this. Let's see. Let's see, can these guys hold them and force them back down? They came aggressive here, but then they got that forced down. Let's see what this does. Now, let's just say, for the sake of saying that they'll push up, I'm going to do this. We got a wall right here. I doubt they'll make it back up here if they're going to stay down for this target. Now, I don't think they're going to climb all the way up there just to come back and get this. At least we don't anticipate that should happen. I hope they don't want to do all of that just to come back down there and hit what was reasonable. That's all. Right now, you don't have the momentum on your side. They're still above this close, so they can push up. They absolutely can. They're trying to absorb this selling here. They're trying to absorb that selling. They're trying to absorb it. Can they still do it? I'm going to just throw this in here. You got a little bit of red right in here, but I don't anticipate they want to do that to get what was reasonable. That's the only thing. This is reasonable. I don't think they want to get all the way up here, just come back and do that. They get up there, there's a chance they may run through it. Just may. There's a good chance. Just might. They're trying to absorb again. Let's see. All right, so they're running past. Okay, they're getting aggressive again. Let's see how this works. They're still right inside this threshold of this bar. That's 1, 2, 3 bars here, still holding that threshold without breaking the back of this bar. They're above the close. Get under the close. You got to get under the close. That's the rule for the down. I'm sorry, I didn't point to it. Live bar. We want the live bar trading beneath or below that close. That's important. If that is not happening, the prior bar, if it's not doing it, to the prior bar, momentum is not on your side. They'll pick up speed. I really want to let you know that's really how it works. Now, notice what they're doing. They're right at our level, 48. They're right at it. Can they come back through it? They can. Let's count our bars. Now, I did tell you in prior videos, if you're new to the channel, once they get to a trend, they can, stall. They stall before they got to it, pushed up. They haven't made the trend distance yet. All right, so now they're coming into this hot. I mean, you can see these guys absorb that aggressive selling right in there, and now they're coming in really, really aggressive here. Let's see what happens. They're right into that red area right there. Here come your wick. You got pressure trying to kick in, but again, we got aggressive buying up under us. So let's see. I suspect they get past this. They might do something with that high. They might be able to go ahead and get back through it. Now, can they come back up here and close? Yeah, they can. They can absolutely come back up there and close today. They can. They absolutely can. Absolutely. They could be wanting to give us this. All right, so let's do our because it's not a trend down yet. So let's do this. And I'm gonna just give you probably 5 minutes after 2 o'clock, and then I will go. So we're pulling up on 147 here. Again, if there's a little static in the video, do forgive me. I'm not going out of my way to go get no headset for this. Do forgive me. I'm giving you valuable information. Can you hear me? Is all that's important realistically. That's all that's important. If you can hear me, that's the good thing. That's the most important part of it all. Give me 1 second. All right, I'm back. I had to take care of something really quickly there. All right, so if they're going to go up, all right, so you see them wanting to stall here, but it's not happening. They're absorbing the selling in here. Last ditch effort right here. We can see what that'll do, but I don't know. Again, that's not a downtrend. 1, 2, 3, 4, 5. That's only 5, so they can turn around and go back up. Now let's just take a look here. Let's slide this forward. Not so much. Did they close beneath this one? No, they did not. So let's slide this one forward. All right, so let's slide this one forward. They didn't close beneath that threshold. They didn't. They're turning back around. They're always headed somewhere. I have you guys know that they're headed somewhere all the time. Let me just slide this up so it can be even with that. Give or take a tick. I'm trying to make sure this is like, all right. Give or take. You get it. All right, so now the same thing. They're going back up. So where are they going? All right, so we're expecting them to get here. They already had this in play. So either one of these will do just fine. All right, so that's what they're doing. All right, so there you go. You can take a look. I did tell you I didn't think they would want to get up this high. They ain't not going to get up this high and go and get what's reasonable. That's crazy. So I want you to start looking at it just like that. It's not reasonable for them to do that. Why would you climb so high to go get what's reasonable? That's not it. So let's just be realistic. That's all. Just be realistic. If they're going to go to that target, they need to within reason. Yeah, I understand a little give back. I get that. But we want to see them kind of, just kind of come right back at it. Don't want them to have to, begin to pick up so much strength and then start running. They're trading in here. I don't suspect that they'll do this, but I'm going to drag it forward. I don't suspect that they'll do this, but I'll drag it forward. So let's just put this right here. I'm going to just put it right there. I don't suspect, but they, of course, they came down here and did this. They put 5 here, and it's not. If they'd have put one more, I would have said there's a good chance you might have a problem. That's kind of what they did at 9:30. Okay, they did that at 9:30. Put that 6-1 in there, went the other way, and then came back and gave you the 7th one, and then took the dive. All right, and you saw that here. See, they made the target. See, they made the 6-1, gave you the 7th one, and then made the target. But of course, they rallied back up that way, and then of course went down there and got that target. Matter of fact, we can take this off. All right, so they made that. So I hope that they don't want to do the same exact thing. Really simple stuff. I'm trying to give you a complete experience when it comes to trading, something that you can kind of just put framework around your expectations. Like, hey, do I have this in play? If this now just depends on your expectation. I said that. If you want a lot of ticks, make sure you got a trend. If you just want, I would say more than a scalp, but somewhere in between a trend and a scalping trade. You kind of want to get out of the market, but you don't want to, just scalp and take 10 or 20 ticks. Go with the no touch setup. It's the universal price action pattern. Go with that. You don't have to wait till the 3rd bar. Be the 3rd bar. Be the 4th one. Then after that, take your wins and leave. But if you want to just scalp, hey, I don't want to be in the market long because they change too much all the time. Well, this should satisfy that as well. So I'm trying to give you a dynamic way of looking at the markets. I showed you on yesterday. I told, of course, everyone in the email that they were going to be falling this month. So April was going to be a bearish month. And that was a whole month in advance. I said on March 31st. And so of course, the activity, they was down all the way to the end of the month. And so now let's see what they got to offer. So if I could tell you, just like I told you, they'll get up to 18.5 back in August. They did it. You can stay in the market for as long as you will want to based on what's reasonable. That's all. What's reasonable. All right. So they kicked this bar. They haven't closed beneath this threshold yet. All right, so they kicked the bar. This is a no close bar because we got a level back here. They're not closing under this bar. This is the hard stop. Remember, I told you only got 2 places where it can take place if you're doing the no touch, no close method. If you're doing that, you have this one here, okay, this range here, And then this one right here, which they didn't close beneath this threshold. They haven't done that. So they hit the bar. They ran the bar, which is understandable to some degree. But we don't need them regarding what's here. We don't want them to do that and then start falling again. All right, so let me just kind of put that there just in case they want to pull that kind of stunt. Okay, because I see they ran in there and now they're wicking. This is your wick zone. They wicked in this area. All right. We don't want them to wick out and then go down. Okay, yeah, come on, let's get back to it. Put the wick back on this side of it and let's go again. Let's go again. All right, push up, back above the close. That's what you want. You want it back above the close and kind of get this out your way because we're trying to go back this way. We want to go up. If they're not going to, create a downtrend, well, clearly they're still up. They're still up. Just go up. You can see the aggressive buying coming in. It's trapping the aggressive selling. Let's see, can we go through this high and then, of course, punch this one and take off? Let's just see. As you can tell, the rotation came in here, leaned back into that aggressive buying here on this 1 second. Same thing, kind of grind it down into this information here where they absorb that aggressive selling. And of course, they're turning again. All right, everything in context. Really simple stuff. Really simple stuff. We want to get the mid. There's the mid above the high. That's requirement number one. I told you when I first came online, that was the requirement to try to make sure you're not getting chopped up. That's why I told you that. Get this mid above the high. Chances is you got it and they should keep pushing. Well, because of this rule is including that. All right. You get this mid above this high. Well, clearly you're going to have that live bar above that close. Now, I want to give you definitively, this is where you can really need to start and make sure you have that threshold. You have the threshold and you blend that with it. You should absolutely have no trouble getting to where it is that you believe market should go within reason. Everything has to be within reason. I want to make sure that I keep stating that to you. Don't come to this expecting significantly more than what the market is suggesting at any given point. Don't do that. And hopefully this video was served just as useful as yesterday's video. These two should encompass absolutely all of the information I've disclosed to you online within this whole year. So this will be pretty much the annual mark of me being on YouTube. So a whole year, in a whole year, there's enough information I've disclosed that should absolutely, bar none, get you where you want to go. Just with simplicity, nothing complicated, not a whole lot of steps. We don't have to do that. You don't need a whole lot of bars. You don't want to do that. Remember, you don't want these guys moving too far because too far is a whole nother move. That's them wanting to go in that direction. For how long, it's going to depend on, of course, the market. So you want to read that hard right edge and make sure that you're staying current with what it is that they're willing to offer you at the time, what they're telling you at that particular moment. Make sure that you're reading what it is that they're saying at that moment. It's important that you do that. I can't stress that enough. Now, let's see if we're closer. No, we're not quite there. We're close, but just not quite there. We're not quite there. We got that above us. Now, remember, we threw these lines in here roughly going on an hour. So we put those lines here. They're using them as, of course, a place to trade to and use, I don't know, for support if you want to go with that concept. Sure. They're using that too. You can know in advance what's important. They pretty much then spent all day long. So your daily bias, my people, I want you to know this. It's in here. This is your daily bias. Yeah, they ran down there. I totally get it. But this is your bias. This right here. If they're unable to stay outside of this threshold, well, your bias is kind of both. It's bullish and it's bearish. It's capable of being both. But overall, if you just shrink the chart, yes, it's been down. If you want to go at it, because they're not, clearly, they're now just getting back to the open. They're just now doing that. They're not up here. They're not up here and they're not above that threshold. So it's bearish, respectfully, but they're offering you both. You see, these swings are really, really big. All right, these are major swings. They're not pullbacks. You're putting trends inside of trends. These are major swings like this here. You grind it all the way down. That's a trend down. You didn't want to break this trend, so we're going back that way. So it's kind of both. And so if you learn the threshold, I want to say this to you. It's really important. That's why I put it online. This is important. And what I'm showing you is important. You're seeing it happen in real time over and over and over again. This is important. So if you want to know your daily bias, I know everybody online is searching for it, so I figured it probably just makes sense to give you this information. Let me give you this. There's so much I know. I'll give you this, and this is easy. So much, but here you go. This is easy, absolutely easy. Here you go, right here. Just look at this, and every bar has it. Every bar. I don't care what day, what time frame you're trading. Whether it's a daily, a weekly, a monthly, a hourly, a 15-minute, a 5-minute, 1 minute, whatever's your preference. Whatever, I don't care. It doesn't matter. It's going to do the same thing because it's a fluid event, so it's always happening, and that's why you got to make sure per time frame that you're trading. All right, and that's where most of you may get in trouble because if you're doing a lot of fractal trading, I only have these two primarily for that threshold. So I don't want to give you a lot of different time frames with the thresholds. Take it upon yourself and understand fractal analysis. I don't want to go into that again. I don't, not with this information. You can go and do that on your own. But just with the daily, trying to get an idea of what the day would be, I would say definitely you want to get an eye what this is. All right. So, and then of course you can bring that to whatever time frame you're trading. Bring it to that time frame. All right. Really important that you do that. They ran the high, which is fine. It's fine. Now let's see what else they got to offer. What's to the left? Don't worry so much about that. Try to stay with what they're doing. Make sure that live bar is trading above the close. Try to do that. Now they did it here, but they didn't want to keep going. All right. So they didn't want to keep, and remember, they don't supposed to be coming back this way. And so then the next bar came, they ran that. All right. So you want to stay with them. So while they're trading above the close, remember, you still got a problem in front of you. All right. So this is the problem. This is the problem. So even though they're trading above the close, this is the problem. All right. Here, they didn't even get there. They didn't get there. Here, they didn't. They didn't want to get there on that green bar. They didn't. This is still the problem. So if you bought, okay, and they're coming back to give you drawdown, what's reasonable? Is them staying not closing beneath here? Can they just run the stop? Yeah, they can. Yeah, they absolutely can. That's why you should be buying it like right here. No sooner they get above the close, hard stop right under that green bar. And if they just so happen to kick you, lose a little bit. Don't buy it up here. That's past that close. It wouldn't make sense. And no sooner they come back this way, one tick maybe, if you want to, and then hard stop there and see if it'll continue on. Do not let these guys make a bar like really big and then you go jump in it and then all of a sudden you're wondering why you're catching all of that drawdown and they're coming back and they're giving you problems. I don't want that for you. All right, so let me just move this out the way because I got to draw the box on the other side. That's the only reason why I'm doing that. You watching the video, you knew it was there. I'm not trying to, of course, distort what it is that you're seeing. 2:00. Now here come our news. Here we go. All right, let's see. Can we get this to go up? 2:00. All right. So yeah, we hit this. Can we get the other one? Come on, let's get this other one. Let's get the other one, please. Notice how they traded through the thresholds and kicked those two bars, but they didn't close beneath them. Now, let's see, can we get this one? Come on, back up above that threshold, please. Don't go under the threshold. Go back above the threshold. We got 27 seconds here. 27 seconds. You can look into 1 second. You can see the aggression. They're starting to come back in it. All right. So there we go. They're starting to come back in it. And yes, we made it. All righty. So that's 2:00. That's that news. All right. So I gave you the news. I didn't give you the 9:30. Do understand I'm not coming back to stay on here because, again, the support. It's all about supporting the cause. I'm trying to help other people. That's really the goal. If I'm helping you, don't just watch the video and then leave. Hit the like button. Help someone. That's the goal. I don't want to purchase any subscribers. I ain't doing none of that because I know the content that I'm delivering. You've never seen anything remotely close like this online. That's going to show it to you in real time. Read it to you in real time. Wins and losses. Not just winning. There's losses involved. I've done live trades on here, showed you, hey, I take losses. And here's the thing. If you ever go back and look at my live trades, I'm not trading any of this stuff that I'm showing you in those videos. I'm not. I'm just trading the no touch. Just out the box, no touch, just how you would have to trade it. I'm trading no touch. I didn't reference ranges and thresholds, and I didn't do any of that. I didn't. I was just taking trades. So clearly, when you go back and just take a look at just some of the live trades or even some of the videos I've been talking to you about the no touch, I'm already privy to this information. I just didn't release it. So even the losses I was showing you, I take losses. That's fine. I know how to dodge them. I do. I got tools that'll help me do that. I do, for the most part, I still take losses, but for the most part, I'm not just jumping in front of the market doing something crazy. I'm not doing that. That's not how you do it. But I wanted to make sure that you have some information moving forward that you can utilize and be aware of that's happening all the time. It's happening all the time. And all you have to do is be patient enough, allow it to happen. Let's see what they do with this one. Allow it to happen. But yeah, if you go back and take a look, you'll absolutely look at the trades different. Uh, some of the live trades I took, you'll look at them different. You'll know, like, yeah, I was already aware of this stuff. I was. And been aware of it for many, many years. Okay. And I've been doing this for a very long time. And markets are simple. They're not complicated. Well, if they're not going to stay down, I just moved this over here to see if they want to do that. But you can see that aggression coming in and they're really getting strong. Let's see how they respond to this one, maybe. Okay, just give you a couple more minutes. You can go back and take a look at those videos if you were like, and kind of filter this information into what it is that I was telling you with the live trades, and of course all the videos that I shot, explaining to you the trend, explaining to you the chart scale. You can go back and take a look at all of that stuff and kind of blend this information with it. Blend this information with it, and you will clearly, absolutely see they're hitting their head up against this that high, the range of this bar, the threshold high. They're hitting their head up against it. And now remember, it's fluid, so it moved. Well, it didn't move yet. It probably will though. 480 if they keep climbing. That's 480.50. All right. So, but yeah, go back and take a look at all of the content on the channel. Go take a look, and then start taking what it is that I've disclosed to you about this, the threshold. The threshold. It's the universal threshold. I can assure you, the bar's closing is important. It's how it closes. All right. It closed outside that threshold on the red bar. That prior red bar here, it closed outside of that threshold. You can see, okay, you see it. They dove right into this aggressive buying here. Okay, this aggressive buying. All right, they blew past the aggressive selling here. They did give you a response here off this aggressive selling here. I coded all of these tools, and again, this is not no touch color in here. It's not, nor are the levels. You can see, the green here, but there's no level. None of this is that no touch. None of that. All right, so, but really simple stuff. Really simple stuff. Go to your chart. Begin to look at it. Now they can get bullish, so your bias can shift within a day. They were beneath this lower level here. Okay, they were pushing down. You can see they were struggling to do it because of those massive pop-ups. Those pop-ups are crazy. All right. And so they were beneath this threshold. All right. So we'll give it to you all. This threshold of this bar. Remember, 1, 2, they dove into it and they came right back out of it. And so now they went down there. Now I told you, and then this is what I told you yesterday, and I mean it. If these guys do not come back up here, they'll end up down here. So you're not really out of the neck of the woods just yet. We want to see if they can get back above here. All right. We want to see if they can get back above here moving forward. Let's see if they can do that. Let's just see if they can get that done. I'm going to kind of get this one out of your way. Let's get this one out of your way. Because they didn't close beneath this. They didn't close beneath it, but it's this one right here that I'm really concerned about, because that's how they drove in and then they popped out of it. So if you want to know what's reasonable, go with the size of the bar. That's number one. So if they're not going to, I want to make sure I express this to you. If they're not going to break this bar, the back of this bar, I know they close beneath that threshold, but if they're not going to do it, okay, that's reasonable. All right. Now, do they have to go up here? They don't have to. They can turn it back around and come back down right now. They could. But look at where they fed into. Look at our range here that we put here, our threshold. Look at this. We put that here. They moved up towards the top of it, rotated down, kind of meandered. News came in. Here we go, right in this area, and they're still above it now. Actually, trading above it. This threshold here, they figured it out that they want to go up some more. So here you go, and just kind of move that forward. They didn't break the back of this bar. They didn't. This bar finished above that threshold. It finished above it. That's bullish. It didn't finish inside of it. It's above it. That's bullish. This one is inside of it. So this is that bar without the color. All right. So this is that bar without the color. Well, could it determine that it'll drop? I don't know. We got to see where it go. I know I don't like the fact that it just closed beneath here, but maybe they'll come back and grab it, engulf it, and take off again. Let's just see where the market goes moving forward. This will be the last upload for this particular section here. And again, if you're new to the channel, let me put this in front of you so you'll know. If you're new to the channel, I would suggest, yeah, definitely take in this video. Absolutely. Watch the one from yesterday too, because there's only 2 of them that's going to be in this section. There's only 2. Better than your daily bias. I want you to know that, because it's happening all the time. And it's not just like I know they referenced the what is it called, premium discount stuff, all of that stuff. I don't know. You can go with that if you want. It's a little bit more dynamic than that. All right. So it's not just 50% over here and 50% over there. That's no, it's not really that. There's something else going on. And if you pay attention to anything that I've just disclosed to you for the past hour, and of course this 28 minutes, you put all that together and begin to watch the charts, and you'll see it's a lot simpler than that, but it's a little bit more than just that. Is right in, I'll say right in the middle. It's not that they're wrong. No one that's used that stuff is not wrong. I just know it's dynamic, it's fluid, it's doing something a little bit more sophisticated, but yet very simple. It's a simple thing that it's doing. If you're new to the channel, take and utilize this threshold, please. There's nothing online that would absolutely show it to you in this manner. Make sure you know what your trend is. Then you can go ahead with that no touch, because then if you use this, it just draws into focus, because if the trend is too big, the price action method would draw into focus 2 bars. And then from there, you use this to know that there's only 2 possible scenarios within those 2 bars. Okay, so there's this threshold here, and you know, if you want to go up, you don't want them closing beneath that lower threshold. And if you want to go down, you don't want them closing above the upper part of the threshold. And then, of course, the chart scale, which I didn't talk to you so much about that, but I will have you know it's very simple, very simple. Now, there is a chart scale that's provided outside of YouTube, all right? And this is far more dynamic than what I'll tell you here. But the center of the scale, I'll just touch on this and then I'm gone. The center of the scale is right here, people. It's right here, right in the middle here, right in the middle of your chart scale, right here. That's the center of your scale. You have the upper part of your scale here, and then of course you have your lower part of your chart scale. If they above the center of your scale, well, they can go up. If they above the upper part of your scale, they really can go up. All right. If they below the mid of your scale, they can go down. If they're below the lower part of your scale, they can go even lower. It's just that simple. Want to make sure that trading makes sense to you. See this threshold I told you, and them closing beneath this bar. They close beneath that bar is closed. That's not fun. That's not fun. That's not fun. I'm gonna just throw this here, and then I must go. All right. So that's my time with you guys. I hope that you found this informative. That's the goal. Try to give you some information that is useful. All right. So that's my time with you. I do wish you all the best with your trading. Thank you guys for the support that you gave on the last video. Hopefully, again, this information right here will carry you the rest of the way. I don't really foresee any reason to come back and of course deliver any more content. My information is below every video. All right. So I wish you all the best with your trading. Take care.